Welcome back to our channel, where we break down complex accounting topics into simple, digestible pieces. Today, we're diving into the crucial topic of notes to financial statements. This part of the financial statements provides essential details that can influence how users interpret a company's financial health. Let's jump into our first question. Question 1. What is the primary purpose of the information presented in the notes to the financial statements? The correct answer is A. The notes to the financial statements are designed to provide disclosures required by GAAP. They amplify or explain the items presented in the financial statements, ensuring transparency and clarity for users. Question 2. Which of the following must be disclosed in a summary of significant accounting policies? The answer is A. The summary of significant accounting policies includes essential information about the basis of consolidation, depreciation methods, and other accounting practices that impact financial statements. Question 3. Under what circumstances should a company disclose related party transactions? The correct answer is D. Companies must disclose material related party transactions, excluding routine compensation arrangements and expenses that occur in the normal course of business. Question 4. Dex Company has entered into a joint venture with an affiliate to secure access to additional inventory. Under the joint venture agreement, Dex will purchase the output of the venture at prices negotiated on an arm's length basis. Which of the following is or are required to be disclosed about the related party transaction? 1. The amount due to the affiliate at the balance sheet date. 2. The dollar amount of the purchases during the year. The correct answer is C. Transactions between affiliates are considered related party transactions, and disclosures must include both the dollar amount of purchases during the year and the amount due from or to the affiliate at the balance sheet date. This is essential for transparency and to inform users about potential impacts on the financial statements. Question 5. What should a public entity disclose in its annual financial statements about customers that account for 43% and 40% of sales? The correct answer is B. Because these two customers account for a significant percentage of sales, disclosing the revenue generated from them is necessary to inform users about potential vulnerabilities due to concentration. Question 6. Which statement is correct concerning financial statement disclosure of accounting policies? The answer is B. Disclosure of significant accounting policies is required and is a critical part of the financial statements, providing clarity and context for users. Question 7. Which items must be disclosed about a related party transaction involving a joint venture? 1. The amount due to the affiliate at the balance sheet date. 2. The dollar amount of the purchases during the year. The correct answer is C. Both the amount due to the affiliate at the balance sheet date and the dollar amount of purchases during the year are required disclosures for related party transactions. Question 8. What is the purpose of disclosing a significant number of unsecured trade account receivables with companies operating in the same industry? The correct answer is A. This disclosure is essential for informing users about the concentration of credit risk associated with the company's receivables. Question 9. Where should a company disclose information about the effect of changing prices according to FOSB standards? The correct answer is C. Information about the effect of changing prices should be reported as supplementary information to the financial statements. Question 10. What is a required enterprise-wide disclosure regarding external customers for a publicly traded company? The answer is A. Companies must disclose revenues from any single customer that accounts for 10% or more of total enterprise revenues. And there you have it. We've covered some essential questions related to the notes to financial statements. Understanding these concepts is vital for anyone preparing for accounting exams or working in finance. If you found this video helpful, make sure to like, subscribe, and hit the bell icon for notifications on our latest